Today, I will be breaking down a few trades I took on GER30, or otherwise known as the DAX index, during the London session. For those of you who are London session traders, this is a really good asset to trade. With today's trade breakdown, I want to emphasize that trading should not be complicated, and as traders, we are making an estimation of whether price will go up or down without coming back to our stop losses. Okay? When you break it down like that, it really is that simple. Obviously, it takes time. Obviously, it takes patience. Obviously, it takes back testing and dedication and forward testing to get comfortable making these decisions whilst trading. But my point is that we should not overcomplicate trading. Okay. Whatever strategy you use is a way for you to interpret price action. That's it. Okay. Most strategies work. I personally use the smart money concept ICT strategy that is so popular right now because that's how I interpret price action. But whatever strategy you use, as long as you are comfortable with that strategy and you know what you're doing and you have an edge, then you are able to be profitable. Okay. Now, before I enter any trade, I always visualize all outcomes. Okay. I have a bias, but I will visualize both the positive and the negative outcome, and I will visualize how price may react, whether it goes up or down. The reason I do so is so that I do not emotionally react to however the market goes, and it is part of practicing the art of staying neutral. Okay, as traders, that is extremely important. The market will do its thing, and the only thing you can control is whether you click buy or sell or stay out. That's the only thing your job is as a trader. Okay. Now, despite having a thesis, the market may not move the way you expect, and thus you must consider all outcomes before entering any trade. Before each week starts, I always take a look at Forex Factory over here. Okay. Now, the trades that I'm about to show you took place on Wednesday. So because I knew that there would be FOMC news at 2 p.m. New York time over here, and yes, GER30, the DAX index, despite being a German index, is still affected by USD news. I expected we would not get a huge expansionary move during the London session. Still, I was looking for trades because I know that London Open has an injection of volatility. Okay. This is usually the case based on data and backtesting. This is usually the case every single day. Okay. There is usually an injection of volatility at around 3 a.m. New York time, so the London Open, and I was expecting some sort of liquidity to be taken out. So I will go through my analysis with you. Okay. So I usually start off with the lower time frame. I will go up to the higher time frame just for bias, but just to see where the pools of liquidity are, I will start off the lower time frame. I mark out Monday's high and Monday's low. I usually do not trade Mondays because usually, again, based on data, based on my back testing, it is usually a consolidation day. And I like to see what Monday does before I take any trades. Okay, so this was a Wednesday. I marked out buy side liquidity over here, swing highs over here, and I marked out sell side liquidity over here in the form of equal lows. Okay, on the day. I don't know why this is not marked out, but there are equal lows over here. Okay, that was what I had on my charts. Monday's high and Monday's low. Okay, Monday's low over here. So I saw this on the 5-minute chart. I then went up to the 4-hour chart. Let's go over here. The 4-hour chart over here. And I can see that price extremely bullish. Okay, we are making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And I can see that the bullish fair value gaps, bullish imbalances are being respected. Okay, over here. So because I'm seeing that, I am expecting prices to be bullish. My bias is bullish, okay? If you go down to the 1 hour as well, you can see that um, price is respecting these fair value gaps over here. It's being respected because the body is closing above and it's only wicking these areas. So before going into the session, I am expecting bullish prices. I'm expecting longs. But again, like I said earlier, this is the art of saying neutral. This Let's go over here. I do see that at the time, this 1 hour imbalance was not yet rebalanced. And like I said earlier, there were these equal lows. So because I know that around the London Open period, because I know that there's usually some sort of manipulation or there's usually some sort of um, false move, I saw that price was wicking above this buy side liquidity. And we're assuming that there are stop losses up here. Okay. So if I go down to the 5 minute chart, I saw this, right? I saw this at around 310, 315-ish. And because I saw this and because I knew that there were equal lows down here, and again, the same assumption is made. We assume that there are a bunch of stop losses down here because equal lows, and we assume that there is a bunch of liquidity resting down here. So the market will probably seek that out. Um, I assume that price will want to reach down here. So even though my bias is bullish, I am still willing to take shorts down to this area because, like I said earlier, a 1 hour fair value gap over here and a bunch of liquidity resting down over here. So what I did was I go down to the 1 minute and I see that there is I see that a bunch of imbalances are being created and I see that these swing lows are being disrespected and these fair value gaps are being disrespected. Okay. So I then assume that this huge 1 minute imbalance will probably also be disrespected. And I enter off over here. I put my stop loss up here for a 2.3 RR down to the sell side liquidity. Okay. Very simple, very textbook counter trend scalp. Again, I don't target any lower because on the higher time frames, we are bullish, but this is a very good example of a counter trend scalp. Okay. Now, what I then do is I see that price is reacting off of the pool of liquidity. It's accumulating. Okay. It's accumulating. And I also see that price is reacting off of this 1 hour fair value gap. Okay. So this was, sorry, that, yep, over here. Okay. So let me mark this out. Actually, let me mark this out. Okay, because I know that this is being respected, I then look for longs because my bias is bullish, and I see that on the lower time frames, I see that not only is price accumulating, but we also get an entry over here. For those of you who trade ICT, you know what I'm talking about. It's the market structure shift with an imbalance, a fair value gap. And I see that price not only makes a market structure shift over here, but there are a bunch of imbalances being left behind. Now, I don't set a limit order. I market execute. So I wait until price retraces back to the 1 minute imbalance to see if price actually rejects it or not. And I see that price makes a bullish impulsive move up. This is when I enter. I put my stop losses down here. If you want to be safer, you can put your stop losses down over here instead. But I felt quite confident, so I put it down over here, and I let the trade go to. I put my TP at Monday's high over here. Okay, for a 2.8 R trade. Now, because my bias was bullish, what I usually do is I never take partials, and I will usually just let the market do its thing, and with the DAX index, it will make these huge impulsive moves up, and I will just move my stops with each 5-minute swing low created. So if I were to trade how I usually trade, then I would have got a 3.8 R on this day. Okay. But because I knew that there was FOMC later, I did not want to hold my position for much longer. And I was expecting more consolidation, especially pre-FO, especially in this period before FOMC. So that is the reason why I took out my trade over here at Monday's high. Okay. Two textbook trades, and I made around a 5R. I made around 5R on this day. Okay, 5%. Trading does not have to be complicated, guys. Okay. You should be able to identify what is happening lifetime. And if you are able to manage your risk, make sure to leave runners and make sure to actually take profit at decent areas and to manage your risk whilst you are in a position, you should be able to become profitable. Okay, this is why I'm sharing my trades with you because I want to provide breakdowns of actual trades that I took, so to show all of you that even though it takes time and patience, it is possible and it's very simple. Okay, so to recap today's lesson, this is the protocol I use personally to trade the DAX index during the London session, London Open specifically. Number one, I will only look for trades from 3 a.m. to 4:30 New York time. Okay. I will not look at the charts any other time. I will mark out my POIs or potential liquidity pools. So it was the it was the 1 hour fair value gap over here, and Monday's high, Monday's low, and the pools of liquidity I marked out over here. Okay, buy side liquidity and sell side liquidity. Okay. I will see if price rejects off of it and disrespects a PD array, like I showed you earlier. I will target the closest pool of liquidity if the setup is counter trend, like I did earlier, and I will leave a runner if it is in trend. Obviously, on this day, because there was FOMC news at 2 p.m., I did not do that. But usually, I will leave a runner if in trend because this is the only way I can guarantee that far my winning trades are much more profitable than my losing trades. Okay. So that is my 5-step protocol for trading the DAX index during London session. And the key takeaways, the key lessons that I want to um, impose onto you guys is firstly, the art of staying neutral, being able to take counter trend trades, even though your bias is bullish, being a dynamic decision maker, being able to see price action in live time and be able to take these trades. And not only that, but being mentally comfortable with seeing price leave you. Okay. So that wraps up today's trade breakdown. I hope you guys have a lovely day. Feel free to leave any questions for me in the comment section below. And yes, peace.